everyone, I'm Gurleen. I hope you're doing well. In today's video, we'll be discussing the market outlook for the upcoming week and we'll also discuss the trade plan for Monday, that is April 17th, 2023 for Nifty and Bank Nifty. We'll also take a look at a few select stocks from various sectors wherein good risk to reward opportunities are brewing up. So be sure to stick around till the end of the video and don't forget to hit the like and subscribe button and do ring the notification bell so that you never miss an update. So without any further ado, let's take a look at the technical angle, starting with Nifty 50 on the weekly time frame. So here you can see that Nifty has closed positive for the third consecutive week after having reversed from the harmonic reversal zone of 16,989. And for now, it looks like that we've got a near-term base at the levels of 16,800. You can also see that Nifty has swiftly given a breakout above this falling channel and is currently trading at the 17,800 mark. Now let's see what the daily time frame has to tell us. So you can see that it's more or less 9 consecutive positive closings and the street has been anticipating a pullback or a temporary pause in the trend which is due. And as we've been discussing over the course of the last few videos, that Nifty can either extend towards the 17,926 mark, and that possibility as of now is open over here. Also, Nifty, as you can see over here, is trading within a wide potential reversal zone and the RSI is also inching slowly into the overbought territory. So at this point in time, it's best to be watchful and trail your positional longs. Now moving forward with the hourly time frame, here you can see that the index is consolidating within the wide range of 17,690 to 17,926, and it might as well continue to move within this range and inch higher towards the levels of 17,926 as long as it is placed above these moving averages. Here it's also very interesting to note or observe the bearish divergence that is on the price chart and the oscillator. But the first sign of a temporary pause in the trend will be the breakdown of these averages placed at the levels of 17,751 followed by 17,659. Also keep in mind that we are near the major resistance level, so trade with caution. On the 15-minute chart, the trading setup is quite simple. The first possibility is that the index might continue to move within this wide range of 17,728 to 17,842. But you might ask that what if it breaks above the high of 17,842? Well, in that case, it's possible for Nifty to inch higher towards the levels of 17,926 with an invalidation level of 17,728. On the flip side, if we do see a breakdown below this range or at the level of 17,728, so it's possible for Nifty to test the levels of 17,660 with an invalidation level placed at the high. Let's talk about the support and resistance levels for Nifty. So here the support level is placed at 17,660 followed by 17,485, whereas the resistance level is placed at 17,926 followed by 18,135. Now let's move to Bank Nifty, starting with the weekly time frame. So here on the weekly time frame, you can see that Bank Nifty has posted the third consecutive positive weekly closing, and we have seen a breakout of this falling trend line with a follow through on the upside on the daily charts as well. Also, HDFC Bank has announced the Q4 earnings, and no doubt about the stability or even the quality standards being maintained very well. But the results have missed street estimates in terms of operational profits and the net interest income. Now, as we have seen in the last few days that the banking heavyweights have led Bank Nifty on the higher side, so is the result going to be a trigger for a slowdown? Well, let's take a look at the daily time frame. In the last video, we discussed that if Bank Nifty moves past this high of 41,610, then we can expect it to test the levels of 42,068 followed by 42,268. So you can see here on the daily chart that even the RSI is slowly entering into the overbought territory, and considering the results as well, it's crucial for Bank Nifty to hold on to this 42,000 mark. Now you might ask that what if it doesn't? Well, in that case, we can anticipate Bank Nifty to drag down, but to what levels? So let's find that out on the hourly time frame. You can see that in the last trading session, that was on Friday, Bank Nifty traded almost flat in the first half in a range of 41,800 to 41,500. And we've discussed quite a number of times that how you can trade such range bound setups, and at the breakup breakout of this inside bar, Bank Nifty continuously moved higher without catching its breath. So here on the hourly chart, it's possible for Bank Nifty to test this breakout level of 41,800 or even catch up with the moving averages that are placed at the levels of 41,587 followed by 41,288. But that as of now is just a possibility. And here on the hourly chart, the upside would only open up above the previous day high towards the levels of 42,268 followed by 42,495. Now the support for Bank Nifty is placed at 41,800 followed by 41,595 and the resistance is placed at 42,268 followed by 42,495. Now let's move to stocks. Let's start with the update on IndiaMART. So we discussed that IndiaMART had already given a breakout and a conclusive sign would be a move above the level of 5140, and in that case I was expecting a target of 5275 followed by 5400. So you can see that the targets of 5275 and 5400 have been achieved at this front, and it's also very interesting to notice this long upper wick, which simply means that the price was not able to sustain at the higher levels, and towards the end of the trading session the bears snapped in all the gains. So it's time to be watchful at this front. And for anyone who's playing IndiaMART for a medium term basis, you can consider the invalidation level to be 4900. The next one is HDFC Bank. So you can see that HDFC Bank is trading close to the all-time high levels of 1725, and with the quarter 4 results, that particular level might be the maximum possible upside for now. Also, you can see that we were referring to this zone of 1538 to 1540 in HDFC Bank as a strong demand zone, and we saw momentum coming in from the same. So from a near to medium term perspective, the level of 1540 will be a strong support to watch out for. The next on the list is Bajaj Auto, which on the monthly charts has given a breakout from a 2-year long consolidation. Though we are in the middle of the month and we are yet to witness the monthly closing, but the chart looks strong, so I'm expecting it to hold above the 4000 mark for the April series. On the weekly chart, you can see that Bajaj Auto has already come a long way and is trading near the resistance level or the harmonic potential reversal zone of 43.15. So a cool off from the current levels won't be unusual over here, and thereafter we might see the positive momentum continuing towards the levels of 45.45. So you can keep this one on your watch list. Now there has been a lot of buzz around the realty sector, and one that tops the list is DLF. So here on the weekly chart of DLF, you can see that the stock has been into a consolidation phase for almost 6 months and is now near the breakout level of 418. Also, we have a harmonic pattern over here which suggests that a sustainable move above the zone of 407 to 418 will trigger an up move in DLF, and in that case it's very likely for DLF to test the levels of 468 to 488 on the upside. In this case, the risk can be adjusted accordingly. Let's also take a look at a few pharma names, starting with Laurus Labs. Now we have seen some respite in Laurus Labs over the course of the last 2 weeks, and the questions that are coming up are, can Laurus Labs head further up? Well, it's simple. As long as the stock holds on to this low of 286, it's likely to test the levels of 348 to 380 from a near to medium term perspective. The next from the pharma space that we've been discussing is Dr. Reddy. Now the update here is that, as anticipated, Dr. Reddy has achieved the projected level of 4914, which happens to be the potential reversal zone, and it's possible for Dr. Reddy to consolidate or cool off from the current levels and thereafter inch higher to test the levels of 5392 to 5400 over the medium term. Well, that's to keep you updated with the markets, and on that note, it's Gurleen signing off. Until we meet again, have a good time.